The name Hindenburg has often been associated with disaster. In May 1937, the German passenger airship LZ-129 Hindenburg caught fire and was destroyed while attempting to dock with its mooring mast in New Jersey, USA, causing 35 fatalities. SMS Hindenburg was a battle cruiser of the German Imperial Navy during World War I that was scuttled after the Germans surrendered and sold for scrap. Now, another Hindenburg has struck disaster, publishing a torpedo of allegations targeting the once third richest man in the world, Gautam Adani, and his Adani Group. To understand Hindenburg's allegations better, first we need to make sense of Adani's sprawling business empire, which is basically divided into 4 parts: trading, Adani Enterprises; logistics, Adani Ports and Airports; energy, Adani Green, Adani Total; and others like Adani Wilmar, which is in the business of food processing. Adani Enterprises is the oldest of them all and acts like the mothership that incubates, launches and funds all his new businesses till they are ready to be spun off into separate companies. Hindenburg alleges that Adani took bank loans in Adani Enterprise for the specific purpose of growing his new companies, but then siphoned off at least part of it to 38 shell companies set up in tax havens, allegedly controlled by Vinod Adani, Gautam Adani's 74-year-old eldest brother, who changed his name to Vinod Shantilal Shah when he moved to Dubai in the 1990s, where he now lives, though he is reportedly a citizen of Cyprus but a resident of Singapore. Based on information from the leaked Panama Papers documents in possession of the Indian government. Allegedly, Shah Adani then round-tripped this money back to India in the form of foreign portfolio investment so as to inflate the price of Adani's mothership company Enterprise, whose inflated valuations in turn allowed him to borrow even more money from banks and repeat this cycle. Directorate of Revenue Intelligence DRI records reveal that a person called Chang Chung Ling shared the same residential address with Gautam Adani's above-mentioned brother Vinod in Singapore. Now this Chang Chung Ling is quite a mysterious character. He served as director in a company which was suspected to have been involved in the Augusta Westland VVIP helicopter scam. Its related company owns stakes in multiple Adani companies to the tune of $4.5 billion, while another of Chang's related companies merged with Adani Power in 2011, making a profit of $423 million. And despite Chang's name being mentioned 4 times in Hindenburg's report, Adani did not comment on the relationship between his brother and Chang in any part of its 413-page long response to the allegations. A second allegation is that because Adani's own offshore companies held shares in Adani, it broke SEBI listing rules that mandate at least 25% equity of any company to be held by non-promoter investors. Thirdly, due to the inflated share price, the debt to market cap ratio was seen as low, masking the fact that actually it was at unacceptable levels. This allowed Adani companies to continuously raise fresh loans, part of which was diverted to pay dividends to shareholders. And that the 20,000 crore $2.5 billion FPO to raise fresh equity was an attempt by Adani to remedy the situation. Fourthly, that its tiny and largely unknown auditing firm Shah Daria, with just 4 partners and 11 employees, was too young and inexperienced to keep track of the many hundreds of thousands of transactions from over 500 companies in Adani's stable. While Hindenburg's allegations are serious, noted economist and journalist Swaminathan Iyer believes
the Hindenburg report may be the best thing that ever happened to Adani.
He says this in a positive light. Adani was expanding and diversifying at a breakneck speed, most of it on borrowed money. This is a highly risky strategy, and the chances are there that if he fumbled at one, it would lead to a domino effect and bring down his entire empire. We have seen this happen to Anil Ambani, who borrowed aggressively for unrelated businesses like the Mumbai Metro, marine businesses, and went bust. Liquor baron Vijay Mallya too ventured out of his zone into Kingfisher Airlines, and he also fell flat. So Hindenburg may well act like a speedbreaker to Adani, forcing him to slow down and rethink his strategy. But first, he has to fight the fire that is already burning and conserve cash. So he is walking away from bidding for electricity trader PTC India, saving 4,000 crore of $52 million. Scrap plans to buy DB Power's coal plant, saving 7,000 crore, $850 million. Pulled out of the 2,000 crore race to acquire SKS Power and stopped work at the petrochemical to PVC complex he was building at Mudra, costing 35,000 crore, almost $4.5 billion. As a confidence-building measure, he repaid debts of 1,500 crore to SBI mutual funds and returned over $2 billion of money he had borrowed by pledging his company shares, assuring his overseas bondholders that he is in a comfortable position with 31,000 crore or $3.9 billion in cash reserves.
We have repaid 12,000 crore in the last 9 months and will pay back all our debts on time.
As of now, SBI, the largest Indian lender with 4,000 crore given to Adani Enterprises, is standing by them.
Even after factoring the share fall, their cash flow is adequate to meet debt obligations.
They are largely correct because to promote infrastructure projects in India, the government provides an assured rate of return, giving lenders clear cash flow visibility. Adani's business model is based on simple arbitrage. He borrows tons of long-term debt from abroad at 6 to 7%, hedges it for rupee depreciation at 3 to 5% for a total cost of about 10 to 11%, while the government assures a 15% return. This middle spread of 4 to 5% on a huge capital outlay gives him a free cash flow of 50 to 60,000 crore per year. However, it is the ESG arena, environmental, social and governance, where he has taken the maximum beating. Environmentally conscious Norway's largest pension fund KLP sold its entire holding of Adani Green Energy, as did more than 500 other funds in the European Union, when it was revealed he used Adani Green stock as collateral to help finance a coal mine in Australia. Worst for him was when Francis Total put a hold on its $6 billion investment in Adani Total. In damage control mode and to repair the severe hit to their image, Adani has appointed international communication and legal advisors who were able to secure a loan of $800 million to refinance Adani Green's maturing debt. However, the cash crunch is showing, even though fortunately for them, no big loan is due till mid-2024. It is raising money against assets, extending debt maturities, selling equity, and looking for fresh lenders. But his fortunes changed dramatically when he got US-based Rajiv Jain to buy into his story, whose Australia-listed company GQG bought 4 of his company shares for 15,000 crore, $1.87 billion, though at a discounted price.
He, Adani, is not a fraud like Satyam or Enron. There's a lot of hot air going around his stock.
Leading to a turn in sentiment as Adani's stocks rallied since then, recouping part of its $150 billion rout. Adani's response right at the start of the crisis was to withdraw his 20,000 crore FPO, despite managing to get it fully subscribed,
to insulate investors from potential losses.
Such boldness is not uncharacteristic of him, because it was this very attitude combined with a sharp business acumen that got him to where he is today. It was Congress Chief Minister Chimanbhai Patel in the 1990s that gave Gautam Adani the right to operate a minor port in the Kutch Desert that did not even have a rail connection. To create business for his port, he strategically identified the one item India always needed, coal, and began importing it in huge quantities. To handle large volumes, he built the world's largest and automated coal handling facility, including 22 kilometers of conveyor belts, which allowed multiple ships to unload at the same time. Then, to promote the use of his port for export, he built a special economic zone for industries and encouraged them to set up base there. And to assure them 24/7 electricity, he built a coal-powered power plant using some of the very coal he himself imported. Then added a massive container terminal, turning a barren port into the country's largest within 30 years, a feat nothing short of miraculous. Adani Ports is so highly automated and fast that it actually compensates ships that are not docked and unloaded on schedule. Where else do you hear that? Sure, he is close to the Prime Minister, who backed him in the $1.18 billion Haifa port deal in Israel even after the allegations broke, because this is a business Adani is especially good at. He has in the past acquired jetties and ports in a dozen countries, beating international companies like Maersk and Dubai World in competitive auctions, and has since added airports to add synergy to his ports business to become the largest airport operator in India, a story we covered in detail in our previous video on Adani. Somehow Adani's story reminds us of the story of the great Dhirubhai Ambani, who too was accused of similar manipulations in Hamish MacDonald's 1998 book, The Polyester Prince, but who went on to create the world's largest export-oriented oil refinery, with operating margins higher than even Singapore's famed refineries, proving himself world-class. And like the legendary Dhirubhai, who used convertible debentures to raise money for his huge projects, unheard of in the early 1980s, Adani too used an innovative financial technique of never diluting equity in his spun-off subsidiaries that closely mirrored Adani Enterprise holdings, allowing him to keep his stock price high. So will this crisis affect the India story? Short answer, yes. India's valuations as a whole are affected, at least for a while, though previous financial crises have had a far greater impact on Indian indices than this one. This is partly because mutual funds largely stayed away from investing in the group, and Adani's free float was too small to affect a large number of retail investors. However, bank stocks that were just about stabilizing were hit by the failure of Silicon Valley Bank. Fortunately, 60% of Adani's borrowings, $8 billion, are from abroad. And very important, Adani hasn't yet defaulted and is unlikely to do so. So it is only sentiment that is dragging the market down. Confidence remains also because PSU banks have invested in specific Adani projects whose returns come via escrow accounts, meaning that whatever cash comes in, the first right is of the lending bank. Opposition parties will try to get mileage out of maligning the Prime Minister's image because of his closeness to Adani. And though the Parliament and SEBI's probe into Hindenburg's allegations may result in just a slap on the wrist, this is probably the greatest challenge Adani has ever faced in his life. Bisbo's Limerick. There is a great Indian industrialist called Adani who was accused by Hindenburg of felony. His stocks fell down and broke his crown, but there is no doubt he still performed splendidly. You will also find these sources listed in our video description section.